Tiz.
What's up, guys? Welcome to the Podnas, a show with three friends separated by distance, connected by brotherhood, having weekly conversations that you can join in on. As always, I'm 1/3 of the partners, your boy Tiz, along with
other third of the partners, the Padawan here up in 757 Virginia, and I'm also with
Was Adam, man, it's facing the place, just trying to stay on pace with this race.
Right on, right on. And as you guys can see, we have a special guest in the building this week. We are talking stocks this week, so I brought in my uncle,
Uncle Kurt. So it's a pleasure being here, and I thank you gentlemen for letting me in the basement tonight.
Absolutely, man. It's genuinely our pleasure. Listeners, if you don't know, this is the Where the Money Resides episode. We are talking stocks and how to get involved in it. Me and the fellas, we have been ourselves kind of dipping our toes in the waters here with investing. And as beginner investors, we thought we're looking at a lot of people in the world right now trying to find their way into the market. And a lot of people are just intimidated because of just lack of knowledge. So tonight we're going to try to bring some basic beginner info to you guys via Uncle Curtis, who is a longtime investor and who kind of got my mind into the stock game and kind of broke it down for me in a way that I was able to digest it. So hopefully by the end of the night show, you guys will have at least the jumping off points of how to get involved in stocks and bonds, how to not be afraid of that, kind of take some of the fear away from it, and just give you some basic tips on how you can navigate those waters. So without further ado, we had some questions lined up that we're going to ask Unc, and he's going to basically break it down in layman's terms how to kind of get involved. So Unc, if you're ready.
Fire 'em at me.
Right on. So the first question that I had, just before you even get to the point of thinking about investing, what would one person want to do to prepare themselves for investing?
Gotcha. Excellent question, especially to take away the apprehension that a lot of people have about investing. Couple things up front. You do not need a lot of money to start investing. Investing is a habit. Investing is a long-term goal. So you don't need a giant stockpile of money to start investing. You just need to remember a few rules. One is this: investing should be discretionary money. In your budgets, as we go through life, you're going to have your monthly money to keep you alive. You're going to have savings. You're going to have emergency money. But now we're going to need a fourth part, and that's going to be called your investment process of your money. And that's discretionary fund. It's discretionary because it's money that you're going to use. It's money that you're going to keep using, but it's not money you're going to put your hand on. You're just going to let that wealth grow. So that's the first one, is to know that you don't need a lot of money. You just need to start the process of investing. So one of the things you want to do is, first, you want to start either, if you have some extra money that you want to automatically start investing with, you can. Mm-hmm. If not, one of the easiest things to do is start taking a portion of your income a month, set it aside like seed money, and you're going to use that purchasing some stocks. Now, the great thing about it is, you're going to start making money. And as you make more and more money, darn right going to come addictive. So you're going to start putting more and more in because you're watching your money grow. And unlike an IRA or 401, that's money you can put your hands on at any time. So the first thing you want to do is either put aside money for investing, or let's say you come into a little money, whether it's a stimulus package, whether it's a bet on the game. If you got a little money that you want to invest, put it in the market, watch it grow.
Yes, sir.
Now,
yes, sir.
A couple things about it too, and we're gonna go through it, as we go on more bullet points about it. You want to diversify your portfolio. You don't want to put everything into one thing you know about. A few basic rules I like to let everybody know too. Never bet, never invest, never put money into a stock or company that you don't believe in. If you don't believe in it, don't invest in it. And the
Gotcha.
main, like anything else in life, do your homework, investigate it first, and then get the right timing up.
Right on. I heard you say when you want to make sure that you pick a stock that you personally believe in. My next question is, if I found a stock, I really believe in this product, it's something that I personally use or I'm personally, knowledgeable about. What if the share price is over what I have available to invest? For example, a stock like Tesla, where the share price is extremely high for a person that may be on a limited budget. How would I get involved maybe in that stock when the share price is at such a high point?
Gotcha. And that's one we wrestle with all the time. Tesla is a great company. They have rewarded me quite often, so I'm thankful for it. But I'm gonna give you secrets in how to invest in things that you might not think you had money for. The first one is this: you're starting off. Just because you can't afford an $849 stock in Tesla right now doesn't mean you can't afford a $5 or $7 stock in a company that's giving you the same return on investment. What I'm gonna teach you to do and what I want you guys to embrace is this. A lot of time, a company is great because of how much money you see people making off of it. But I want you to look at it differently. I want you to look at the return on the investment. There are a lot of companies out there under 50 bucks, under 20 bucks, that are growing and have the same return on investment. They just don't cost as much as Tesla. So if you're not purchasing a stock for under $1,000, you're not going to see the return of it like that. But if your return on your investment is very high on a $20 investment, you're going to grow that money. And the best thing that's going to happen is I'm going to teach you that you might not be prepared for Tesla now, but you will be prepared for Tesla in the future. If my kids were here, they'd tell you I beat them down with this one. Chance favors the prepared mind. Just because you can't buy Tesla right now doesn't mean you won't buy them in a year or two when they split again.
Gotcha.
So you take those stocks, and I call them my dream stocks, the stocks that I want to hold, the companies I want to hold, and you label them, you put them down, and if you can't buy them now, that's fine. You will be able to buy them one day. And that's going to be even more beneficial. You're going to like that more because you waited, you were patient, you made the money in other stocks, and now you can purchase your higher stocks. And that's one of the ways I'm going to show you that you don't really need to put a lot of money in, because once you start that seed money and your investing start to grow, well, you can sell one stock and purchase a more expensive stock off of your growth on it. So that's another way of doing it. So Tesla might not be here today, but it will be in your horizon in a couple of years.
Yes,
and if you think about a stock, Apple, I usually don't throw out stock tips. I don't do that. I'm not a fan of it, but Apple is a company I believe in.
Okay.
Think about it. Since Apple went public, they have split 5 times. So since they have split 5 times, you will be able to take advantage of them over the decades. And that's how you would do with Tesla. When they split their price and it's cheaper, then you can take advantage of it then.
Did y'all have a follow-up? If not, I have one that kind of go right off of what he just said.
Go follow.
When you say split, a lot of people out there may not understand what you mean by a company splitting its price. Can you break that down a little bit for us?
Yes, sir. Yes, sir. And I want people to understand the one thing I want everybody to embrace and to get is that we were never taught how to invest. Our parents did a great job of teaching us about a checkbook and how to save, but they never taught us how to invest. So it's kind of new to us. So once we get the terms and the acronyms, it's easy then. A company will take their high price, and we're going to use Tesla again. I think they closed at $849.63 last night. So what they'll do is, when they want to raise money for whatever reason, research and development, maybe they want to just produce profits or go into something new, they want to make their stocks more enticing. And the cheaper a stock is, the more enticing it is for people to buy. So if a stock is $849 and you sit there and say you really like Tesla, it's a great company, ran very well. And at $8.49, it's out of your price range. So what Tesla do is they'll do a 5-to-1 split. So instead of the price being $8.49, now it's $160. Now it's $200. They can, a lot of times they'll put it under $100. So they'll split the stock price where they will give the people who already have stocks, they will just multiply the amount of stocks they have by whatever the split is. So if it's a 5-to-1 split and you have 100 shares of Tesla, you now have 500 shares. That's for the people already. But they split the price to make new investors to put it in your price range. Nothing is the same as going to Nordstrom's or Dillard's on New Year's and there's a sale. So maybe I afford that shirt 3 months ago, but now it's 75% off, it's 50% off. It's 50% off in thought, but it's not, it doesn't change what the stock is worth. It just allows you the ability to come in and buy it. And it goes, they'll do a stock split to make the stock cheaper. And then they'll do a stock split sometimes to make the stock higher. So a stock split is a good thing because it allows a lot of people to purchase a stock they normally couldn't purchase. And the last two most famous splits recently is Apple and Tesla both split a couple months ago. And that's the perfect opportunity for a young investor to jump on it then.
Gotcha.
I've had the pleasure of buying Apple when they split 2 other times. And you will see that the stock price will go back generally to what it was. Your money will grow astronomically because the more people who buy stocks, the more your stock is worth.
Got it. So basically, if I had a stock that was worth $400 and it did a 4-to-1 split, I would now have, instead of maybe 10 stocks, I'd have 40. But when those prices went back up, I still got 40 stocks, 40 shares, but now all of those shares are basically what they were worth initially. So I've pretty much quadrupled my money by basically just holding on to those 10 shares. But because the company made that decision, it benefits me in that way.
Absolutely. And then it goes into another, one of the secrets or one of the things we'll call our rules, our basement rules of investing. There's some companies you buy to hold for life, to hold for your kids. There's some companies out there, you buy stocks in them and you never plan on selling them because they're going to grow and they're going to keep growing and they're great companies and they're not going to go backwards. So those stocks you hold on to. And then there's some stocks you buy to keep for a portion of time, make money, you sell them, then you go buy other things. And then some stocks are just a little riskier than others. And then some stocks are just a mistake. The good thing about it is they make stop losses. They make, you're going to constantly watch your money. So if it's not going in the direction you think it should go in, well, you do your investing and when you start researching and you see directions that you don't want to go in, pull your money out. Unlike a 401k or a Roth IRA, you can control your money by the minute.
Got you. Fellas?
I really don't have it. Excuse me. I really don't have any follow-ups to that because it was really on point. And I love the way you explain it because it gives me an adequate understanding of even the splits to understanding where I can understand it on any level. My first question personally is, what are the most common made mistakes by new investors coming into the stock market?
Mm-hmm.
Well, I got a bunch of scars on my forehead, so I made those mistakes. And the good thing is, man, if I can do anything, is learn from any mistake that I can teach anybody. One of them is this: diversify your portfolio. Everybody's good at something, or we know a lot about something. You guys have a great opportunity to make a lot of money in the market because as you understand millennials and the way things are going now, you actually can see trends in the market. Once you're going to start looking at everything in a different way going forward. And one of them is this: say you're a gamer, you love video games. Well, you sit there and you realize which games are the best games. And then you notice that this one company, they keep producing great games. So you invest your money in those companies and you do well in them. Well, you look up in your portfolio, and what I mean by portfolio, I just mean the group of stocks you own. It's your wealth building, like a big portfolio book. When you look in your portfolio, you might have 2 or 3, 4 or 5 different gaming companies you bought into. You bought their stocks and you're doing really good in them. You gotta control yourself and be a little patient. Even though you're making good money in them, don't oversaturate yourself in one aspect, or as they call them, a sector. You can't put all your money in gaming. You can't put all your money in agriculture. You want to put all your money in telecommunications. And the reason being is, even though they're doing great and you're making great money, when the market does shift and you look up for a few months and the telecommunication companies aren't doing well, they were 80 and 75% of your portfolio. So you're not able to balance that off. What I'm going to teach you is to put money in different sectors, different areas. Put money in energy, put money in agriculture, put money in transportation, because the way the markets are, one is going to go up. The majority of your sectors will go up. Some will go down, but as they go down, you don't have to worry about them, because your other profits balance those off to where you don't see them. The true goal that I want you three and anybody I can help to do, our true goal is this. I want you to make money when you sleep.
Yes,
when
sir.
you sleep, your investments are growing. As you close your eyes and you have great dreams, your money is making money as you sleep. So
Yeah, I want that too.
The other mistakes, that's a big one. Make sure you diversify your portfolio. Here's another one. Stock tips. Very, very rarely work out. Man, your best friend is gonna give you a stock tip that is it's can't miss stock, no brain. There's no such thing as a can't miss. So you're always gonna hear me teach that any stock, I want you to believe in it. I want you to investigate it. Trust yet verify. I want you to investigate that company. I want you to read the prospectus of the sheets, and you're gonna start doing it, and you're not gonna mind doing it because it's your money. So you're gonna look at those sheets, those estimates of what a company is doing, the reports on their quarterly basis. You're gonna love looking at them, because that's your money and you're investing in it, and you don't trust anybody with your money. So don't take stock. It very rarely work out. Now, if you take the tip, you believe in that company, you looked it up, you did your homework, you have verified it, that's fine. Then you invest in it. The other one is be patient. A lot like cooking. The best dishes, any good cook, whether it's my grandmama or my mama, will teach you that the best dishes are cooked slow and long. So
Yes, sir.
same way, there are no get rich schemes. I know you hear about them all the time. I'm sure somebody's going to ask me about cryptocurrency one day, but they're no good. The market is a long game. It's not a short game. So there are going to be sometimes that the best move is no move. Sometimes the best move in the market is to do nothing. Keep what you got, hold what you got. Then sometimes it's going to be a good idea to back down what you have in the market. So don't be afraid to adjust. Don't think just because I'm making money every day, I'm going to keep on making money. That market will turn the other way on you. There is a difference between a bull market and a bear market. And if anybody ever wondered why they picked a bull and a bear, I'd be glad to explain to you. But they're good markets and they're bad markets. Be flexible, be willing to switch up and change. So again, the biggest mistakes I would tell people do not oversaturate, diversify your portfolio. Watch out for the stock tips, because I haven't seen a life where they work much. I call them urban myths. And the last one, be willing to be flexible. If the market isn't great, don't make moves. Be patient. Just because you've been making money, some people get the little itch, like almost like a gambler. I got to keep on investing. I got to keep on investing. Sometimes the best move is no move. So those are my three biggest mistakes I've seen people make.
Right on.
Any follow-ups, fellas?
I guess just for the listeners' sake, I've already kind of had them break it down for me before, but what is that? I heard you say the bull and the bear market. Just to break that down in layman's terms for the listener who may have seen those terms or seen those symbols, but not fully understood what that meant.
Gotcha. And you know that my nephew is nothing that we don't talk about. Bear market and a bull market. Sometimes, and I've seen a lot of y'all shows and I've enjoyed them. Sometimes there are a lot of secrets out there that people don't willingly give to us. that we have to kind of go get ourselves.
Yep.
And hell, I spent over 20 years in corporate America and another 10 years in management to know that acronyms, technical terms, and jargon is what most companies speak as. And when you start watching shows, like you're gonna start watching shows like Bloomberg or Money, sometimes it seems like they're talking a foreign language. And it's because they use acronyms all the time. But once you get the acronyms, you'll sit to yourself and say, why didn't they just say blah? But I don't know why they do it. When they describe a market, you have a bear market and a bull market. A bear market means that the forecast of the market doesn't look good. That the economy going forward does not look good. It looks bleak. It's not growing. And then you have a bull market that means that everything is looking up, that the market is strong. It's a great time to invest and we're making a killing. The reason they use a bear and a bull is this. When a bear fights, it swings down when it fights because when it stands up on its two hind legs, it's so tall that its prey it has to swing down on, hence the down market. But when a bull fights, it charges full speed and it uses his head to propel up with his horns. And that's how it fights. It always lunges up and forward. So one of the old Rothschilds probably picked that as a term that if you want to look up to a market that is strong, that's your bull fighting up. But if it's not time to invest and things are looking bad, that's your bear fighting down. So that's how they use that one. But they'll use it a lot, and then you hear it in the news all the time, and that's how they refer to the markets. So I call it their second language they use.
Right.
Okay.
So people out there, you don't have to be confused about that anymore. Now we done got a peek behind the curtain.
There we go.
I'm in my head trying to logically think, why would they call it a bear or a bull? Well, I know a bull just runs all the time, pretty much.
Yep.
Oh. Before I ask any questions, y'all had any questions for me or?
Yeah, I got one more question. All right, Curtis. So what is the easiest, or should I say safest way for someone on a budgeted income to start getting involved in the stock market?
Okay. There's so many people out there who defeat themselves at the beginning because once you start talking money and putting money into things, our favorite phrase is, I can't afford it. I can't afford it. Well, the logical and the safest way to do it is to go about it one of two ways. Either put a small amount of money aside monthly and call it your seed money. Or, as I like to say, sacrifice something else. If I don't put money into a certain thing as much, then I can have money for discretionary funds for investing. I like to call it the quarter idea. Growing up, we did kind of the 3-point idea. We saved, we had money for emergencies, and then you had your daily living expenses. You kind of cut it into 3. Well, now cut it in 4. Now I just want you to change your budget to where you save. So this is totally different from your 401k or your Roth IRA or your Coverdale plan for your kids for school or held down to a Christmas fund. That's savings. That's long-term savings that you're putting to the side and you're hopefully not touching. But then you want an emergency fund because hell, your car gonna need tires. I got 2 kids. If you got kids, you know they're gonna need stuff forever. So emergency covers the money that you're gonna need for those things that come up. So you want to put an emergency fund up. I like to say anywhere between 2 and 3 months should be your emergency fund worth of money. Once you put that up, it's your money. Just move it to the side. Just know that's for emergency. Now, you're paying your bills every day, so that's life. But that 4th part, now you're going to put something away, whatever you are comfortable with. Because I promise you this, I don't care if you take $10 a month, $25 a month. When you see that money grow, you're going to add to it. I promise you'll come back to me 6 months later and say, you know what, I upped the amount of money I'm putting in my discretionary fund. And you should, of course you are, because it's making you money. It's making you quick money. You're growing it and it's yours. You can touch it whenever you want to. I just say, Like gambling, don't take your chips off the table. You keep them on the table. Make your money. If you sell your stocks, go buy that dream stock you want and keep making more and more money. You're going to see it grow, and it's going to grow right before your eyes. And it's going to grow. This is one of the saddest things. It's going to grow a lot in times when everybody else is struggling. You guys are going to have your mouth set like, okay, yeah, you know, people are going to be complaining. You're going to be like, it's not that bad for everybody. So that is the safest way to do it. Just take a small portion, whatever you feel comfortable with, put it to the side. And if you don't want to take a small portion, you want to jump right in, go sacrifice something else. Take away something you're doing right now and say, for the next 3 months, I'm going to use that money for my investment. Pick which one you want to do.
That's real.
Yep.
Pat?
Yeah, I cut back on my comic books and put in some money for my stuff.
Good man. Good man.
Smart
Yeah.
sacrifice.
Yeah. All right. Well, I when you were talking, it kind of brought up another question or whatever, and I'm so glad you put in that gamer analogy, because my brother's going to listen to this too, because we've been talking about stocks also, and he's an avid gamer. But it's a term that I've been like ever since this whole GameStop situation with the hedge funds and Reddit. It's a term that's been popping up. I've been hearing a lot, and I'm like, I feel like I'm this close to understanding it, but I'm not fully. It's not fully kicking in. It's that a short or whatever. They said that when they did it, they pulled a short, and that's how the whole GameStop situation actually pulled up. If you could explain to me what a short is, and then that would actually help.
Yes, thank you for asking that.
They use it a couple different ways. Sometimes you hear them say they shorted a stock, and then sometimes they use the term they shorted a company. Let me throw out two things that I personally don't. I won't say I don't believe in it. I'm just not gonna push people towards it. Again, I know maybe one of the listeners is gonna call about or email about cryptocurrency. There are things out there that make a buku of money in a short amount of time. But anything like that is volatile. Just like it'll make you a lot of money, it'll lose you a lot of money. So things like cryptocurrency, I would always say what I'm about to explain to you about a short, get in, get out. Shorting a company or shorting ideas is when you kind of bet on the negatives. So going into the market, starting off, I want you to bet on the positive first. But you'll get some people who you'll hear them say, I make money off of losses when companies lose. The most famous 9/11, there are a lot of people who made money during 9/11 because they shorted a lot of companies that were affected at that time. So you can short a loss. Now, unfortunately, during this GameStop and Reddit, and I'll go into more details if people want me to, and it's a great thing to look up. Times like that, it's just a millionaire playing a game with a million. That's all it is. It's a new phenomenon that's happening where, always remember, another thing I'm gonna teach you is that the markets are moved by speculation. A lot of times speculation moves the market. So in GameStop idea, they used the internet and they used actual people going out and talking on the web and talking to each other to push the market price up. And it pushed up, and it pushed up so much, you would have a company like Robinhood to push back on actually letting all their investors invest in it because of the amount of growth that took so fast. Only thing I gotta say about that is just be careful, because anything that volatile that makes money that quick will also lose money that quick. And unfortunately, a lot of us sometimes, when we get into something, we don't think it can go away. And those things go away like this. You invest in Apple, Coca-Cola, I invest in any of those companies, and you will see that they don't go anywhere. You'll see that they don't go anywhere. So they're a safe bet, almost like a blue chip stock. But some of the other things are more volatile, especially when it's being shorted.
Got you. Thank you for explaining that, because that was definitely one of the things I was a little confused on just like Pat. Pat, you got anybody have a follow-up off of that, or?
That was like that was definitely one of them, because I was trying to figure that out myself or whatever. And then when he said some people that bet on the negatives or bet on the bad things of like, well, they make money off a company losing, that made it click in my head. So it basically, like the hedge fund people, they betted that GameStop was going down or whatever, so they put all their money into it. So being that they thought that it was going down, and then the Reddit people found out about it, they just got everybody to get up on GameStop or whatever, and it pretty much I say they lost off of that. At least that's what I'm trying to think. But the other thing I was going to bring it up, because you did say somebody's going to bring up cryptocurrency, and that person was going to be me or whatever, is like Bitcoin, there's Doggy Coin, all this other cryptocurrency. Is it even safe to try invest in if you're like first time investor?
I would say as a first time investor that Bitcoin, cryptocurrency, other companies are coming out with other forms of cryptocurrency. I would not start off there because of the volatility.
Mm-hmm.
I'm trying to give a great analogy, especially because cryptocurrency and short, I kind of want you to see that it kind of works out the same way. Like when the reason I said back with shorting the company was a millionaire plays a game with a millionaire. Well, a lot of times group of people will inflate the price of something, make it go up, sell it, and watch it drop. When it drops, because they had so many shares, when they sold it, that price will drop. Then they can go grab it again for a cheaper price. So they're manipulating the price of the stock. So they sell it short to make money.
Mm-hmm.
They up the price, they bring down the price, and they buy on a short sale. It's very volatile. It's legal to do, but you can. What happens is if you're not in the if you're not in the front of that line, when they do well and get out, you don't know when to get out. But that's my problem with cryptocurrency. Cryptocurrency is making a killing. It is a sound idea. It is a sound idea because when you think about it, the best way I like to say with cryptocurrency is that somebody in Sri Lanka should be able to get money to them, just like somebody in Alabama.
Mm-hmm.
And as a world, we're advanced enough that we can get money to whoever, whenever, however. So the idea is sound. The problem is it's so new. There be anything that's new, all the rules of the game ain't been worked out yet. So my only problem with it is that you can make a ton of money, but you can also lose a ton of money. And because of that, I would not sway an early investor into something like that. I would rather push you toward companies that do nothing but grow. I'm a big fan of IPOs. I like investing in IPOs because they have a greater form of growth quicker, but not as volatile as cryptocurrency or shorting any kind of stock. So that's my. So for a new investor, I definitely would not push them toward cryptocurrency right now. That's a game I'll play in another year or two. And it's going to be great to find out. A date to remember is 2024. A lot of the rules have to change on it. And let me throw out a tidbit for all of your listeners, to all my brethren who have made a lot of money in cryptocurrency. Hear me and hear me well on this one. I'm going to tell you something that nobody is saying right now. Your 1040 stock, your 1040 income tax form, starting this year is going to have a little place on there that says, have you bought any virtual money? So there's a reason why they're putting that on the actual income tax form. So I'm not going to go really far into that because that's a lesson for down the road. But for all those people that I know who've made a lot of money off of cryptocurrency, just know at the end of this year, there's going to be a place on the 1040 form that says, have you made virtual money? And the only thing I know about that is depending on how you check that box, it's depending on how legally you're answering that question.
I understand that.
So
Wow.
a fair warning, a lot of people out there who made a lot of money in cryptocurrency. Some people have been playing the play dumb method. I ain't make none of that. They're gonna start asking now. So I never heard that, but just know it's coming.
Got me scared already. As soon as you said volatility and the IRS is about to get involved, that let me know.
Yeah.
Let me buyer beware.
I thought that.
You know, they're gonna take their part of anything.
I think that was.
Say that to those people we always hear about who made a big ton of money in cryptocurrency. Yeah, I wouldn't advertise that too much more going forward.
Got you. Anybody else have a follow up before I jump in?
The IPO. What did that mean? IPO.
My personal favorite. Initial price offering.
Okay.
When a company think about favorite one, I wish Chick-fil-A would go public. Chick-fil-A is a privately owned company and they're a Christian company. I wish they would go public because they'll make a ton of money, but they're never going to go public. I never say never in this world, but it would go against a lot of their core beliefs if they went public, because then the stockholders can demand change. And the first change they would demand is you're going to open up on Sunday because we'll make more money.
Yeah.
So what happens is a company will decide to go public. When you go public, all that means is that they have decided to let investors invest in the company. So they'll put in to get their license to go public. They will come up with the amount of shares that they might put out there. They might put out 200 million shares out there, and they'll come up with a price for that company. Well, they do a good job of going to the major companies to get it designed, but that price is a volatile price, because if you think about it, one of my favorites was Pinterest. I can't remember if Pinterest came out public at like $5, $4, and I want to say it's in the $70s or $80 right now. Companies will start off with an initial price, and all that IPO means is what it initially came out as. And then when you see what it can raise up to, that's a good way to make a lot of money. I am a huge believer in IPOs. The only warning on an IPO is just watch the company for the first couple of months to the first couple of years. One thing to not scare people about is your money, and because of your I don't want to push the phone, but because of your phone, you can look at your account 24/7. So when you have an IPO and you invest in them, keep watching. Watch it every day. Watch the trends. And a company will grow. Facebook. I bought Facebook when it came out as an IPO. I want to say it was in the 40s. There was a big mistake with it. Dropped down to $19 a share when I bought it, and within the first month. Years and years later, you're talking about $240, $250 a share. So a company is going to grow, and depending on how you believe in that company, and that's why I told you to trust your instincts. You guys know a lot about the future. Use it to make money. If you look at a company and you know it's coming, you do a new gaming company coming out there, a new tech company, a new agriculture company, anything, I'll tell you another one. Hey, to all the people who hate me for what I'm about to say, I'm fine with it. Weed stocks have made
OGI, organic ground.
A lot of money off
Yep.
And looking at the current administration, the more the laws change, the more money you can make into it. So just know that sometimes we know a lot more that's going on than most people. So invest your money into it. When times are bad, people get high. So marijuana stocks were down a couple years ago, but like I said, with this administration, when you see more and more states legalizing marijuana, Canada produces some of the largest amounts, those stocks are out there. They're out there for you to benefit off of.
Yes, they are. I got one that's up 500% in like the past month, because it was such a low share price when I got it. It was like $1.50 a share, and now it's up to like $5 and some change.
And nephew, I'm glad you brought it up. So glad you brought that up. One thing I want to let all your listeners know and all our guests know is this. What he said is the most important thing I want people to remember. ROI, return on your investment. I want you to worry more about what percentage the company is up rather than what money you made. Because sometimes it'll fool you. You'll look at one company and say, well, shoot, I made thousands and thousands of dollars off of this company. And then you'll see another company, you say, I only made a few hundred. It's not a good company. No, sometimes that company is just worth more. The stock costs more. So if the stock costs more, when it returns its investment, you make more. But you'll look at that stock that was only $7 and it's made 500% percentage on it. I love to say this, you can't lose with winning. So if your money is making money 500% more, you keep making that money. It might not be a lot. It might only be $6, $7, but you're making 500% off that $7. You're making $35 off a share. The only problem was you didn't buy enough. Because if you think about it, if you put thousands into it instead of hundreds, you're a very happy camper that day. So I want you, when you look at your stocks, you look at the companies you want to invest in, you look at the return on its investment. From now on, everything else dealing with money, I want you guys to remember, you want to know your return on your investment on it. That's the first question you ask. What's my ROI? You think about it. As we grow, that's what we do. When we first bought our car, the first thing we asked is, how much I'm going to pay a month?
Yep.
Now, but when you first bought your house, the first thing you said is, what is my interest rate? You see how that knowledge grew? So now your new one is, what's the return on my investment? That's what I want you to ask on what is my ROI? That's the first ask.
I love it. I know I have a final question, but I didn't want to overstep my brothers here. Did either one of y'all have something to follow up? If not, I have another beginner investing question here.
The only other question was like, what's a good place to get, like, look up terms or, just to read up on the stocks in general, or like find literature or whatever so I can learn more about the terms, whatever.
The question.
Couple really good ones. And forgive the term name I'm about to say, but they got one called Investing for Dummies. They got one called Stocks for Dummies. I like it because they break down the term names. There are a lot of times that I didn't understand things when I would watch Bloomberg or when I would watch other things. I didn't understand what people were saying until you start learning the terms and everything. You're like, okay, I got this. It makes sense. And they just had to put it in layman's terms. So if you remember the book, it was an old classic. What's that? Rich Dad, Poor Dad?
Yep.
Well, I actually have that book.
Great book. Absolutely great book. One of the ones I insisted on my kids reading. But now he has a Rich Dad. Excellent book because he transitions and he does a very good job of letting you see some of the ways that you can invest. So that's another good one. Start. So there are 2 or 3 great literatures out there to get. I'm a huge believer in homework. Do your homework on it. Another one too. You're gonna find yourself on the radio when you're listening to the financial channels. You're gonna get a lot of information on there. Of my favorite, I like Bloomberg because they give you an international view a little bit more. So when you start seeing what things are happening in the rest of the world, it really kind of changes your view. Data streaming, huge thing now. I was fascinated about how much people are making money in, you take countries in Africa, they can't afford what we can afford a month. However, they buy movies by the minutes or they buy movies at a time for streaming. It's a lot of money to be made there if you think about it. We all have those nightmare stories. I never forget, my wife suggested many, many years ago for me to buy Netflix, and I didn't do it. I thought, well, it doesn't seem like it make any sense. I mean, so look internationally. A lot of that's going on right now. You will see where everybody wants a lot of stuff that America is doing. They can't afford it, but they can afford a way of doing it. So another way for you to make money off of that. I want you to create streams of income over and over again. When you were mentioning literature, some of my favorites, there's another one on streams of income that I really want you to get. Bringing in multiple streams these days, investing is going to be your core way of making sure you can put your hands on other ways of making streams of income. So that's what I want you to start doing.
Kind of just to build off of that. So say there's a listener or viewer out there that has watched this episode, listened to this episode. They're feeling a little less apprehensive. They feel more comfortable. Like, okay, I think I'm ready to, you know what I'm saying, dip my foot in the water, kind of just test the waters out, and I'm ready to buy my first stock. I heard you mention Robinhood. For a beginner investor, what would be the smartest and most user-friendly platform for an investor to use starting off? I know I personally use Robinhood, but is that the best one for a beginner? Are there ones that a beginner should look at instead that would be easier for them?
If anybody from Robinhood is out there, don't take offense what I'm about to say. My wife, huge fan of Robinhood. Many family members, big fans of Robinhood. I would always sway people toward Robinhood at the beginning because of how easy it is to sign up. They've done an excellent job of making it where they offer free stock sometimes. So they really put their platform for user friendly. Plug out there to the IPOs. Robinhood will be launching their IPO probably within the next month or so. They've already gotten approval. We just waiting for the actual date. Again, I don't give stock tips, but I'm gonna throw that out there again. Robinhood will be launching their IPO pretty soon. However, I don't have Robinhood. I go with whoever you. I have Fidelity and I have Charles Schwab. I have two different kinds. On another day's conversation, we'll discuss why you want to have sometimes multiple brokerage houses. But I like them better because of the more advanced stuff they can do for you. You know, now when you get ready, they can offer you a credit card that pays you back cash on every purchase. To the 24-hour assistant, their platform, when you look at it, there's no such thing as I can't make a trade. You know, sometimes you hear nightmare stories and somebody said, I pushed the button, but it didn't go through. It goes through every time. They offer a lot more things for you as far as, you know, other ways to use your investments. The only knock on it is that a lot of times you have to have a certain amount of money kept in there a month. However, they offer more in savings than your bank would, so you would be smarter to move over. So my personal opinion, start off in Robinhood and then go get you some grown man insurance.
Right on. Kind of like building up.
But no on that. Like I said, it's just that the other companies will offer you a little bit more stuff. Their platform just is a little bit higher end.
Got you.
But excellent start. And the great thing about Robinhood is you can start immediately. So say you see this, you get the honking, you know, you believe in the company, start just like that.
Yeah.
But then when you on a personal touch, when you decide that, you know, I think I need a little bit more personal touch now, then the other brokerage houses would be the way I would go.
Got you.
Okay. Well, he answered all my questions, but I mean, even have to ask.
Yeah, pretty much. We got it bring up Fidelity too, and I was the one. I don't know. I had it in my head because I've heard of it before or whatever, but it didn't kick in until you actually said it or whatever. So I'm gonna look up them once I feel more comfortable, pretty much.
So people out there,
great way to look at it. When you feel more comfortable, you're into it. And again, with the Fidelity, there are gonna be other things in life that you're gonna want, whether it's a home loan, a second home loan, a beach house someplace. They're gonna have other parts they can offer you help on. And I like that part. And then again, the individual touch. If you're making money off of my money, I expect you to treat me that way. So I want to be treated well.
No, that's real. So it's basically kind of like the hotels. Like if you're kind of starting off and you're a traveler or something, you may not have enough money for anything but the Ramada Inn. But at some point, you might want to stay in the Westin or something a little more classy just for the amenities and the concierge services and stuff like that.
And then in that situation, Lord knows I done had that men on the pillow many a day. But you know, as you move up and up, you expect more from them. Then it becomes, you're not doing me a favor. You know, I expect more from you. And then the more you have to put up, the more they can offer you. So I just put it that way. There's, some hotels can offer you a massage and a spa, and some can offer you a checkout time. So
Right on, right on. Absolutely. Are there like any main bullet points from just you've kind of dug into a lot tonight, and I think that this is a very beautiful jumping off point for our listeners and viewers to like kind of get their wheels spinning and just kind of give them that direction that they may need to just jump on in there. Are there any main takeaways that you would sum up for our audience that they can kind of hang on to as far as like bullet points that if I didn't quite understand every single thing, these are the main points that I need to take away from this conversation?
in conclusion, I guess I would wrap up everything this way. I would go over some of the most important things we talked about. The first one would be timing. Everybody always asks, when is the best time to start investing? Well, there's no perfect time. It's like the old adage, when is the best time to plant a tree? 20 years ago. When is the second best time to plant a tree? Today. So today is the best day to get into the market. The second most important thing is create a strategic plan. Go into this with a plan, with realistic goals. Go into it knowing your budget, how much you want to invest, how much risk you want to take. Don't take on more risk than you can afford. Diversify your portfolio. Remember to start off using nothing but discretionary funds. And as your money grows, then you can make a decision on how much more you want to reinvest. Don't take your chips off the table. As you grow and grow, reinvest, create a generational wealth for you and your family to come. Most importantly, do your homework. As I like to say, I created the IVR model. IVR, investigate, validate, react. I'm going to repeat that. Investigate, validate, react. When you have done all those things, pull the trigger. The market changes. Don't look up and say shoulda, coulda, woulda. It's one of the worst things to do in life. The last thing to you friends to say is this. The stock market isn't for everybody. If you know you're the type of person who can't stomach the market going up and down, if you can't stomach losing $1 just like you can't stomach gaining $1 sometimes, stay out of the market. It's not for you. Stock market is not for everybody. However, you got other options out there. You have investment groups, you have investment clubs. They're very helpful, and something that's great about them is that it allows you to work with family members and friends. You can pool your money together. You can use the resources. You can let somebody else who is more confident govern the portfolio. So the investment groups are a great idea. It allows you to have a larger part of the market. Highly recommend those. The other thing is sometimes with the larger firms, larger brokerage accounts, you can find somebody to govern your fund. You can find fund managers. You can find advisors to help you to pick the stocks, to balance your portfolio, and it's always a great thing. So those are ideas for you out there if you don't think you're ready to navigate and to handle your own portfolio. Everything I got in my wrap up. Do want to remind you, until we talk again, do your homework. Again, there's some great literature out there. Just some reminders of you. I know I mentioned the Rich Dad, Poor Dad. Grab Robert Kinsky's investment version of it. My favorite book is The Intelligent Investor by Benjamin Graham. Grab it. It's The Intelligent Investor. My favorite book. Start Late, Finish Rich. Another good one. For some of the acronyms and some of the terminology, grab that Investment for Dummies. A Beginner's Guide to the Stock Market is also a very good one. If you don't want to do a lot of reading, look up Warren Buffett's essays. Other great reads when you get ready to start your strategic planning. Go
good luck. Hopefully next time when we talk, we'll be past the start part and we can go into some other ways of helping you grow your money even more. Again, I want to thank my 3 hosts, as I like to call them, the triplets from another mother. Thank you guys for letting me talk to your guests, and hope to see you soon. See you when I see you.
Yes, sir. Yes, sir. Thank you again, for just being gracious enough to give us your time and your expertise and just that knowledge that a lot of us out here are looking for. And we're listening to all of these stock stories on the news and on the internet. But thank you for just putting it and encapsulating it in a edible way, a way that we can actually digest and actually take that and put it into application immediately. Viewers out there, feel free to drop your questions, your thoughts in the comments. This is an ongoing conversation, and Unc, I would actually like to ask you if you would be willing to maybe come back on periodically to just kind of continue our knowledge, so that, you know, now that we're jumping in there and we got viewers out there that's going to be jumping in there as we start that process, once we're in it, just to kind of continue and kind of dig more deep into some details on some of those things that you touched on that I heard you say, like, you know, we could talk about that another time. And I feel like, you know, as our knowledge grows, we want to keep on building on it. So would you be willing to like come back on and just kind of address viewer questions or kind of just grow our knowledge base even more after this beginner process?
Absolutely. It's that, you know, if there's nothing you can't ask, I wouldn't be willing to do. So I'll be on there anytime you got me or want me. Just hit me up. Anybody has any questions for me, shoot it that direction. And hey, I appreciate the work you 3 are doing out there. Each one teach one. So I thank you guys.
Man, thank you as always, Unc. I love you.
Most
appreciate you again. Just thank you, man. You are our very first
Appreciate
guest.
the knowledge.
And I feel like this was the best guest that we could have on as our first time to like really just, we're all about just growing and just having people progress. You know, we got
evolving
theory, you know what I'm saying? This is a way that you can.
And financial literacy.
Absolutely. So like, this is a good way to just kind of, our past 12 episodes, if you've been listening along, this is a good way to kind of now put those thoughts and ideas into action immediately to build generational wealth for you and your family and just have another source of income to make your lives easier. So thank you, Unc. Thank you.
Thank you.
We will be having you back on for sure. And yeah, man. Absolutely, man. Love you. And like I said, I'll be sending you the video files and whatnot tomorrow morning so that you can kind of look at yourself back and let me know what you want me to cut, tweak, or whatever the case may be when I'm editing tomorrow night.
Yes, sir. Again, I thank you guys. You guys have a good one.
Love you.
All right, man. Appreciate it, man.
Be good.
Yes, sir.